The law is clear. Law is very clear. What's not clear sometimes is what people have been told about tax benefits and businesses and things like that. So I think 90% of my job, besides sailing, is education.
Welcome to the Current Yachts podcast. Today, we're welcoming Patrick Wehrly. Patrick is the CEO and founder of the Wehrly Group. Welcome, Patrick.
Thank you. Thank you very much. Very nice to be here.
The Wehrly Group is a maritime tax planning firm headquartered just outside Houston, founded by Patrick in 2005, and with now several offices throughout Texas. So with their extensive knowledge in taxes and financial planning, various strategies, Patrick and his team are awesome resources to the customers that we talk to, individuals, families that want to include yachting in their lifestyle. Ideally, the correct way and with a focus on tax efficiency.
And I happen to know Patrick personally, and he is an avid sailor. So this intertwines with our viewers perfectly, and I'm happy to welcome Patrick to our show.
Well, thank you. It's super nice to be here. I can say that my wife and I have owned 17 yachts in full-time charter. And so I can tell you that we can discuss water makers in the morning. We can talk about solar panels in the afternoon. We can do propulsion, man overboard, firefight, whatever you'd like to talk about, we talk about. But more often, we try to confine the conversation to the concerns and the myths, the misunderstandings on behalf of the next person that we're speaking to. The law is clear. The law is very clear. What's not clear sometimes is what people have been told about tax benefits and businesses and things like that. So I think 90% of my job, besides sailing, is education.
Yeah, and as we all know, boats can be a passion purchase. And it is very important when you're trying to blend passion with business that you are guided in the right way. And I can speak to multiple clients that I have referred to Patrick, and his guidance has been invaluable to them. So we're really happy that you're here to help us guide our viewers along.
Well, thank you again. This is a great platform. I'd rather talk to 100,000 people like this than talk to 100,000 people, one person at a time, and say exactly the same thing.
Yeah, absolutely. So let's start with the fundamentals. I know exactly what I say to clients when they're ready to purchase a boat. But let's ask the question, what is your first question that you ask to individuals that come to you for the blend of the tax planning with purchasing a vessel?
So my concerns are two. Number one, what have you been told? In other words, what do you believe? Let's start there. It's wrong. Not in an ugly or not in an arrogant way, but let's start with what's wrong. And number two, are you familiar with the charter industry? Have you chartered recently? I find that people just sold their business. I had a call this morning at dark 30 from a young lady that sold her business back in February, and she decided this morning that she wants to buy a boat. She's never been on one, but she decided she wants to buy a boat. So that always worries me because, again, they really kind of don't know what they're getting into. I'll have a client occasionally call me up and say, hey, we've decided to buy an RV. And I say, no, not going to happen. I'm not going to give you the money. Here's what you can do. You can rent one 4 times. Bring me the receipts. Show me that you've rented one, and we'll talk. So again, I'm not in the business of turning people away. If that's not good for us or for anybody. But I need to know, what have you been told? Who told it to you? And again, what's your experience? And I'd say 90% of the time, we get people that say, wow, I've been doing this for years, but now I'm retired. Wow, I've been chartering for years. I've been in Croatia. I've been in Corfu. I've been in the BVI, and now it's time to buy a boat. We know what we're doing. We know what we want, and we understand that much of what we've been told is not true, and that's why we're on the phone with a maritime tax expert.
So, Patrick, can you speak to one example of something you hear a lot that is just not true or
Yes.
almost never true?
Well, so let's talk about one thing that's patently not true, and then let's take one thing that I think is just bad information. What's not true is generally the income projections that we see around town. They are not good. Let me just say it that way. They're comical. They appear to inflate the amount of money that's going to come in, and then they deflate the amount of expense that a modern yacht. I mean, I have a 53 Power Cat, and I'm telling you that I'm looking around for the spark plug, and I have this mass amount of machines that convert DC power into AC power. I don't know anything about that. I'm a captain. So again, there's a lot of maintenance that I think is downplayed. There's a lot of issues in terms of income that is overplayed. The card then that is a mistake is Section 179. All of the people, I'd say 90%, present company accepted, of people say, well, we're going to use 179. And you're not going to use 179. And you can't use 179 because 179 has a number of limitations that are not going to make it work for yachts or jets. It's just not. We can do it, but we can't use 179. So I think those are two examples of people getting bad information, perhaps purposefully, and then getting bad information, perhaps accidentally.
Sure. So let's talk on that then. If they're not using Section 179, are they then using a bonus depreciation?
They are, because again, what's great, Mr. Trump, love him or hate him, and people do, both sides, was very clever about making sure that there was no limitations. In other words, and sometimes when I was arguing with a lawyer the other day. By the way, that argument went very well because not only did he suggest that his client go through with the boat purchase, he called me back and he's buying a monohull. And you can't imagine how negative he was. And the reason he was negative is in the old days, depreciation only applied to certain forms of income, for instance. Now it doesn't. If you bought a boat in January compared to buying a boat in December, it made a big difference. It doesn't anymore. So once again, people are pulling their accountants, pulling their attorneys, and pulling their financial advisors into the conversation. And they're saying, well, doesn't it work this way? I said, yes, it does work that way 25 years ago or 15 years ago, but it doesn't now because of Trump-sponsored bonus depreciation. So all the limitations, that's a great point, Amanda, all the limitations that we struggled with that 179 still has, we don't have any of those limitations. We've had people that bought a boat used, which you couldn't do, closed on the 29th, which is the very last day of the year, and we were still able to affect the bonus depreciation in our preparation of the entity return. That's amazing and hard to believe for some people who know or knew how things used to work.
Before we dive in a little bit deeper into the business use and the tax strategies that revolve around, putting a boat into a charter program, which is what we've been referring to, at least deriving some income from a boat being part of a commercial activity. Can you speak for a second about the financing considerations that your clients come to you for? Because it's obvious in some, I would say it's obvious. You tell us if it's obvious. Can you tell if your client is a better candidate to purchase cash or to finance the yacht? What is your general take on this matter of financing a yacht?
So that's a great question because I'm an old real estate guy, and I'm an old guy anyways. And in the real estate world, we always had a saying that said, if there's no loan, there's no deal. I mean, they can want this house more than anything. They can want this yacht more than anything. If there's no loan, there's no deal. So yes, I am licensed and qualified with a number of designations that I hold to comment on that. However, I will say this, I try to stay in my lane. My lane is being a tax expert, proper construction, proper tax preparation, proper and accurate advice and counsel. I'm really good at that. Not being arrogant, I've just been doing this for 40 years, pretty good at it. So I try to stay in my lane. If somebody asks me, a question. For instance, I had a gentleman the other day, a real nice guy, and he said, Patrick, which do you like better, a lagoon or a Robertson and King? And I said, sir, first of all, please know that I can answer that question. But I'm not going to, because that's not what you need me for. You're not going to retain my firm to talk about the differences between charter yachts. They're both fabulous yachts, by the way. I've owned both of them many, many times. But that's not what you need me for. So if somebody says, hey, we have a finance question, and we have a lot of wonderful people, wonderful, very qualified, very honest mortgage brokers that we work with, that we have a relationship with, not a financial relationship, but a relationship where they feel comfortable sending people our way. And so if they're intent on getting a loan, and that's probably going to be something that's going to make more sense. And here's why. In my world, in the tax world, we have what's called arbitrage. So arbitrage just means there's 2 points here. Point number one is if I'm going to borrow money at 7%, which is income tax deductible. Okay. I mean, remember, you got somebody buying $1 million plus yacht, by the way, in a foreign country. So think about that. These are pretty wealthy people. They normally have a very significant adjusted gross income, AGI. So that 7% is tax deductible. So the actual, and I won't get too mathematical here, that might be able to save them a little money. Well, what if their stockbroker is earning 12% or 13% in the stock market? Well, but if I can make 13% and I can pay out 7%, and the 7 is tax deductible, see, I'm starting to like the way that sounds. So again, that's kind of an important point. The next important point is that when people identify to me, I didn't bring it up, but they say we're going to pay cash for the boat and we're going to get the money from our IRA. All the hair on the back of my neck stands straight up, which is actually be a little bit of an issue these last couple days, because the taxes that they're going to pay, there's no way they can repair that damage. There's just not. And many of them don't understand that. Maybe they're managing their own money, and that's fine. And maybe they're having their taxes done by a lady that sells, cookies during the day and then does taxes at night or something. Nothing wrong with selling cookies, by the way. But what I'm saying is they may not be working with a professional firm, especially not a maritime firm. So when we start looking at the damage, I had a lady the other day and she said, well, I need $750 cash. I could not make this up. We were going to have to take out $1.1 million out of her IRA in order for her to net $750. I said, honey, you can borrow $750, from any of these great maritime lenders, and your payments are very little a month. In fact, the $1.1 million will create dividends that would pay the payments, never mind the charter income. So again, I try to stay in my lane, but if somebody asks me a question and I see harm or I see damage,
Sure.
or I see a misunderstanding, then as a fiduciary, we hold ourselves to a fiduciary standard. We're going to jump right in the middle of that and make sure, hey, whatever you do, we're going to be friends, but you might not want to do this.
And for some of your clients, you may have in the past, or maybe you are now, recommending that they do their own, I guess, self-financed against their portfolio where eligible, correct? So they could do their own lending against their portfolio. Can you explain this a little bit?
Yes, I can. And once again, there's somebody whose name I won't mention, but I very much dislike him. And he attends the shows. In fact, I passed by him the other day in Annapolis, and he was lying to somebody, telling them that if the vessel was owned by an LLC, it was automatically a business, which is of course not true. Of course, there's 10 boxes that you have to check off. That's one of them. But what about the other 9? By the way, that gentleman circled back and saw me later, caught me in another booth. And he said, I thought that was odd. I said, sir, the word automatic does not appear in the IRS world. There's no automatic anything. There's things you have to do. There's protocols. There's documents that have to be completed. They have to be signed and dated and contemporaneous and so forth and things like that. So again, that being the case, we kind of suffer along with people kind of, again, like you asked a few moments ago, the primary issue is what have you been told? Let's start there because most of it is likely wrong.
So let's speak to that. What are some of the documentation requirements? What records do boat owners that have boats in a charter business need to prove this business use?
So great question. And nobody ever asks that. They just say, well, again, just buy it, in an LLC and you're good. Oh, and by the way, I'm sorry, having said that, Mary Line, please excuse me. I didn't complete the collateral conversation. So this particular gentleman recommends that you put up your stock portfolio and you borrow money against the portfolio. So again, everybody does that, not him. Everybody can do that, but there's a good way to do it and there's a bad way to do it. There's a way where there's massive commissions and fees that are paid to somebody, and there's a way where there's no commission and no fee. So again, not against commissions, not against fees, but again, the information that we have determined is being given out, in my opinion, is improper. Just wanted to say that. Now, a very good question, Amanda, as always. Number one, you need an effective business plan. You have to have something to compare your original thought 6 months later. Let me give you a great example. When I put I put a crew on my 53 Power Cat and I parked her over in the USVI, United States Virgin Islands. And I had a business plan. Of course I did. Well, 6 months later, I looked at the business plan and I compared it to my original projections. And I was not making the money I was supposed to make. So I added diving. I bought some dive tanks and I bought a compressor and I started advertising different ways and suddenly the revenue came up. So one of the documents that we provide our clients is a 35-page business plan that's updated every 6 months. That's just common sense. There's another document that we call a checklist. Whenever you set foot on your yacht, then you need to think, hey, has the oil been changed? What's going on with the diesel filters? Band tightness maybe on the belt on the gen, especially water maker filters, all those kinds of things. So a lot of our clients are pilots. And so we don't leave that to chance. We have a checklist and you check it off. And then at the end of the meeting, you have the gentleman that you've been working with sign that document. And then we can take that document to the IRS and say, hey, this wasn't a vacation. This was a maintenance trip.
And this proves his active participation in the actual charter business and on everyday work.
It does. Real quick, funny story. My favorite story about that. I was retained by a very large firm up in San Francisco some time back. This gentleman had a massive crude yacht. And the IRS said, well, you're not managing it. The crew is managing it. So they hired us to step in and I looked over all the documentation. So I got the lady on the phone. She was very difficult. And she said, what are you going to tell me, Mr. Wehrly, that's going to change my mind from a fact that this crew does everything? So there is no material participation here. I said, ma'am, we can agree that the crew is managing the yacht. She said, yes, that's what I'm saying. I said, who's managing the crew? Mostly alcoholics, by the way. Sorry, but I'll let that go in this particular case. And so again, material participation, yes, Amanda, to your good point, that yes, if you're on the boat and you're looking at oil filters, you're looking at, the amount of oil that's in the transmission, exactly. Now you're materially participating. And again, whether it's GI, gross income, or what we call guaranteed income, whatever, as long as you're managing the managers that are supposed to be managing, then you're materially participating. By the way, your travel back and forth, obviously included. Time on the vessel, of course, again, that also included. So the target that the IRS, not us, not Patrick, but the target that the IRS has established is something then that's part of that documentation. So business plan updated every 6 months, calendaring your hours, an LLC that has an operating agreement that is specific to chartering. You can't just have this 2-3 page legal Zoom, thing. It's got to be something that says, hey, this is how we're going to make money. this is how we're planning to be profitable and to stay profitable and so forth. So on top of that, good books and records. Our company, our firm, unfortunately, several years ago had to agree to start doing bookkeeping, something I didn't want to do. There's no money in that. It's time consuming, but we're doing it because we found that doctors and lawyers and architects and people with a lot of money were not able sometimes to create very good books and records. Again, the yacht being available for service, that's very important, documenting the fact that she was available. We have a big 80-footer coming over right now from Poland. Beautiful, a big sea reef, sun reef, excuse me.
Yeah.
And nice boat, very nice boat. Hoping to go out on her. And again, she is going to arrive in such a point that she's available for charter. We're advertising, the owner is and his captains are advertising her for charter this year, but she might not be available for a couple months because there'll be little niggles and little things that, fall apart and create, work and things like that on her way over from Poland. So again, the in-service date is another kind of important part of that. So if it's a checklist or it's a business plan or it's something that we think is important, we supply that. Our firm supplies that to make sure that it's done correctly. All the T's are crossed, all the I's are dotted. I was finishing up a tax return for one of our new clients the other day, and I said, hey, I need a copy of your 100-hour rule. And she said, well, don't worry about it. I'm telling you that I did that. I said, I'm worried. She goes, no, I already told you. Don't be worried about that. I did that. I said, sweetheart, you're going to sign the return. And she said, yes, I am. I know that. I said, so am I.
Mm-hmm. Right.
And she said, well, I didn't think that through. She said, you'll have it in the morning. And of course, obviously, we received it and we were able to complete the return. So, Amanda, to your question, there's a lot of little things that need to be done and documented. They're not complicated. They're not hard. I mean, but they have to be done. And
what
we make
you
sure
described, I think makes sense, Patrick, too. A lot of these discerning buyers and owners need to facilitate the elements that come into play when it comes to the active business. So having you facilitate or support what they need to ensure that they're not overlooking any item of that checklist is critical. So thank you for explaining that. I had another question that comes up a lot when we talk to boaters that are looking to, be clever when they buy a boat. And it's the question of entertainment on the boat. Can you speak to that a little bit? Do you have clients who don't really want to charter the boat because, wear and tear, OMG, right? I don't want anybody to damage my boat or anybody to really just use my boat. But if your only intent is to use the boat as a platform to support your business operations, how do you speak to that?
So I have good news, good news. Let me think about this. Good news, and good news.
Okay.
So I'm sorry, I was trying to work some bad news in there somewhere. There just isn't
There
any.
aren't any. Great. Let's hear it.
So let me back up. So about 20 years ago, the IRS became aggravated that people were spending, I could not make this up, $100,000 on box seats at a football game. And their clients can eat and drink, and there's some gal walking around, serving drinks and everything. But the seat next door to that box was only $200 for the game. Well, these people were writing off $200,000, and the IRS said, no, listen, here's the new deal. Entertainment is strictly limited and restricted because you can't pretend that you've got a seat here that's $200, a tax deduction for your client, and the seat 15 feet away is $100,000. We're not going to go for that. If you want to spend the money on your client, please do. You just can't deduct it. So we kind of carry that entertainment thing into the yachting world. So again, good news. On the document that we use to prepare the tax return itself is called a 1065. The 1065 does not have a box that says this percentage of income was from entertainment, and this percentage of income was from crew charter, and this percentage of income was from snorkel. It doesn't have that. What it has is it's real simple, 2 lines. This is how much money came in, and this is how much money went out. That's all it says. It doesn't ask of the flag of the boat. It doesn't ask when the boat was delivered. It may ask when the business began, but that's obviously generally a very different date. A lot of people will set up an LLC early in the year in anticipation of attending Miami, the Miami show, and/or the Annapolis show or FLIBS. The Fort Lauderdale International Yacht Show, boat show. So that being the case, if the entertainment is fair market value, I can tell you that our firm defends a lot of audits, not our clients, but a lot of people end up on my doorstep and they're in trouble, and they should be in trouble. They just have not done a good job. They don't have a business plan. They're just not doing anything except taking the boat out all day, every day, and spending a lot of money on diesel. I just inherited a situation out of Destin the other day that's a disaster on every level. So that being the case, trying to find some middle ground with some of these people and what that looks like. If the boat should go out for about $1,500 a day, and the corporation A is leasing the vessel from corporation B, LLC in this case, and it's FMV, it's fair market value, then that's fine. My professional opinion is that income should be augmented with additional sources of revenue. Let me give you an example. I had a boat in a guaranteed income program for many years. She was a 5-cabin. Whenever I would go out on her, I would invite friends and relatives and high net worth business clients to come out with me. Of course I did. And I would always clip them, for $2,000, $3,000. Because they're saying, "Hey, Patrick, we want to kick in." Wow, thank you for inviting me on your boat. And we want to contribute. We want to kick in. Had a guy, our last trip, wrote me a check for $10,000 and said, "Just give me back whatever you don't use." So that being the case, I declared that income. I declared it. It was fair, FARE. I declared it. I deposited that money in my business checking account. And guess what I did with the money? I paid my mortgage down. I made a big principal reduction payments. So at the end of the 5-year term, I would have a larger equity in my boat so I could step up or step down or whatever. So again, entertainment, if somebody has never asked me, I'm telling you right now, Patrick, I'm never going to charter her. It's only going to be entertainment income. I would want to have a personal conversation with him or her about what that would look like. But certainly that's permissible because, again, on the top line, it's going to be, $300,000 that came in. Maybe the bottom line is going to be $200,000 went out. We're going to have a nice profit, and the IRS is going to be happy. We're going to be happy, and everybody can feel good.
So, Patrick, let's talk about some creative strategies. And I know we've touched a little on financing, but beyond the basics, what are some sophisticated strategies that have helped your clients implement boat ownership?
So recently, we had a gentleman that goofed off and goofed off and goofed off, and unfortunately did not make arrangements to start looking to buy a boat until it was too late. There was no inventory. So had already sold his business. And so he said, "You need to fix this." So
What time of year was this, Patrick?
He contacted us about a month ago. So it was maybe early September-ish, something like that. And he had sold his business and closed in February. So he knew that he was going to have to do something in terms of using bonus depreciation as an offset. And again, bonus depreciation is somewhat complicated. You don't just use it like a get-out-of-jail-free card, but certainly it was available for him at the time. So long story short, he ended up buying a boat that he doesn't like and doesn't want from a particular dealer in South Florida in order to secure the bonus depreciation. Then we have already made a contract with the dealer to buy the boat back, the one that he doesn't want and doesn't like, in September. And then his boat will arrive in October, and we're going to have to, that's don't try this at home. It's fairly complicated. We're going to have to obviously have the adjudication of the sale, and then of course the purchase is going to have to cover the blah blah blah. But anyways, we made that happen.
Yeah.
We had another gentleman that had bought a boat with several of his children, and the children turned out to be kind of a bummer, and we had to extricate him from that, but do it in such a way that it wouldn't disturb the depreciation that was already in place. We've had a number of people during the years that have purchased boats with cash, later realized that it was a mistake, and so they had to refinance the vessel. Complicated, because of course the boat's owned by an LLC, obviously not owned by them. We've also had people that purchased a boat where they bought 3 at the same time, and they put them all 3 in the same LLC. Well, that's a little
Yeah, we heard you're
complicated.
not supposed to do that. But again, we rely on experts like you.
You are not supposed.
to
By the
back
way, the
down.
gentleman that made that mistake, I said, well, how did you make this mistake? You're a smart guy. I said, what did your maritime, what did your CPA tell you? He said, well, I didn't talk to him because I knew he would say no.
Mm.
So
Oh,
anyways, so we try to be creative. Again, we try to stay in our lane. We really do. We love our lane. We know everything in our lane, but there are people will call us on fractional ownership, for instance, say,
Right.
hey, I'm going to buy 1/6 of a boat. That has not worked well because the other 5 people unwittingly are partners of his in the tax benefits. I had one the other day where his partner he's Italian, lives in Italy, and it's not going to work because he's an Italian citizen. Other people try to lease a boat, and I had a guy that was just angry at me, saying, "Well, I'm telling you, the broker said this will work." And I said, well, then call the broker back and ask him if he's going to prepare the tax return, because I'm not going to prepare it because it won't work. So anyways, again, fractional lease, marine mortgages. Again, we love loans. We love mortgages. They're the coolest thing in the world. You've got this income coming in from your profitable business enterprise. You're making your payments. The interest is deductible. Come on, it's the coolest thing in the world. Your $1 million is sitting over at ABC somewhere, going up in value, dividend income, NVIDIA, Home Depot, whatever. And so we're big fans of that and ownership there. Occasionally we'll run into an issue. We had 5 pilots not long ago that all got together and bought a 67, an FP67, nice boat, very nice boat. Sled, we call them sleds. And that was somewhat complicated because it wasn't going to be even Steven. Some of the people were going to have a 10% interest, and some of the people were going to have a 30% interest, and those kinds of things. So again, we made all that work. We got everybody together, and we got it all down in writing, and we got some attorneys involved that are very well known to Amanda, and we got it all done. It's all legal, beagle. We closed. Everybody gets their percentage of the depreciation, and so again, we run into people that are what we call non-ordinary from time to time, and we've done our best over the many years to be creative, legal, accurate, but creative, and open-minded on what that may look like. I had a gentleman that's dating a young lady the other day, and he said, I don't want to put her on as a member because we're not married. Well, anyways, we ended up talking to him and her, and I put my marriage cap on, my marriage hat, and we got that figured out. And we created a buyback provision where if something happened, he was able to buy her interest out at a predetermined amount of money. She didn't resent that. He felt comfortable with that. Obviously, our attorney stepped in and handled all the paperwork, legal beagle, and they got the boat. And they're probably sailing around right now in bathing suits with a cold beer in their hand would be my guess.
Yeah.
That's terrific. I had a follow-up question to that,
Yes.
Patrick. And the question is, do you approach your counseling, your advising differently depending on the price of the asset? So let's say the price of the boat. When somebody's looking to buy a boat, whether used or new, and let's say it's a $250,000 boat or a $3 million boat? Does anything change? Does it actually matter?
So yes, it does. And here's for me, and I do the same thing the IRS does. I do the same thing because that's what the IRS does. So here's a quote. I had a gentleman sometime back that said, well, I'm going to make a profit of $1 this year. And he said, but I'm making a profit.
Right.
And I said, sir, please. I said, the IRS is many things. Dumb is not one of
one of
those
them.
things. Yeah, I said, the profit, sir, is going to be compared to the value of the asset. I mean, if you're buying a $1.5 million boat, this was $1.9 million, and you're going to make $1 profit, you're going to make a revenue officer very angry, and I'm going to charge you a ton of money because I have to overcome this angry revenue officer. So in the same way now, Maryline, to answer your question, I look at the cost of the vessel as a function of your income. If you're one of these, I've got a doctor right now that works in these 24-hour clinics. Oh my goodness, that's a very profitable business. So he's making, say he's pulling down $1.3 million a year between him and his wife. So if he's looking to buy $1 million vessel, as soon as I kind of understand his AGI, then I relate the price of the asset as a function of their income. So I am a little judgmental there when people admit that their dad's giving them money, that
Sure.
they're stealing money from people in the park. They're going through the couches looking for change. I don't want to be part of that because I think that there's going to be a problem if a storm rolls through or we have COVID or something like that. So yeah, I'm kind of funny about that. I'm privileged to be able to work with people that I want to work with and not have to work with people I don't want to work with. And there's people I don't want to work with. And so when they're real thin and stretched like that, I don't think they're going to be enjoying their boat. I think they're going to be worrying about it. And I don't think they need to do it. They need to go out and charter one, have all the fun they want to have, give the charter operator a credit card, and walk away. That's so yeah, I'm kind of funny about that.
One other thing I wanted to bring up is registration. That's a big question here, and I know that has a lot of different implications. I'm not saying that you're an expert on documentation or registration, but I'm sure that you can help assist and guide. So, do things like state taxes matter where they develop their LLC, property taxes on the vessel, registration of the vessel? Can you speak to that?
Yes, as long as they understand what they're doing, what they're getting into. I have people that tell me all the time, well, I'm going to be able to charter my boat in South Florida, but I'm not going to fish her. And so because we're not going to fish, I don't have to pay the sales tax. And by the way, they're confusing the sales tax and the use tax and the business tax with the state income tax. Because when you say tax, you haven't said anything. You've just opened up a treasure trove of disaster. So as long as they know what they're doing, I'm happy. And I will say this, personally, our firm, we will not open an LLC or assist in businesses in New York or California for reasons I think that are designed to protect our clients. Ronald Reagan, one of my favorite people in all of history, love him, love him, love him. He always said, I don't know everything, but I know somebody that can talk about that. So we have a very good attorney, very wonderful guy that has forgotten more about, I think, flagging and registration probably than anybody that we've ever met. And so I don't take the time to go figure all that out because we just call Greg. And so one of the great things about our relationship here is that I'm not involved in the brokerage business. I don't want to be, and I can't. And then Amanda and other people are not in. So we're all doing what we're good at. I liken it to a wheel with spokes, and maybe Amanda's a spoke and Patrick's a spoke, and other people, lenders are on that. But in the middle, the core is the client, and the client's going to benefit from having a team a team of people. Even here at our firm, our attorneys are in-house. Our tax work is in-house. If somebody has a question about management, that's in-house. So we try to do everything under one roof.
Awesome. All right, let's talk about exit strategies and long term planning because a lot of folks don't realize when they talk to you, and we've learned this over the years, that you have to also start with the end. Because if you don't have a plan for the end, it's not going to end well. So, Patrick, uh, of course, nobody wants to think about selling when they're buying. But we should talk about the financial life cycle of boat ownership, if you would. I'm not sure what you call it, but can you share your wisdom on that and what you found in counseling clients over the years?
Yeah. So first of all, we have a saying above my desk: "You're buying to sell." And you're right. People, they don't want to
Right.
talk about that, but that's the reality. You're buying to sell. And that being so once we get that, I think, operating in our minds, then we can be friends. And we can't be friends, unfortunately, if people don't buy into that. So we require, our firm requires a 1 hour consult early in the relationship about exit strategy. Now, we're not asking you to prophesy where you're going to be in 5 years.
Right. Okay.
And, I mean, I have people that are saying that a lot of our clients are oil and gas, and these poor people will bring in an Excel spreadsheet out to age 180. And I'm thinking, sir, in just the next 2 or 3 years, because what happens, it's funny because people call us up and they go, we're starting to look at monohulls again. And I'm like, well, we never talked about that. Hey, I'm starting to like those catamarans. They're ugly and they're slow, but man, there's a lot of, and it's funny. And of course, the old joke: what does a guy with a 45-foot boat want? He wants a 50.
Right.
That's the joke.
Foot-itis.
Exactly. So that being the case, we're not going to hold you to your comments, but we're going to hold you to the knowledge that you have a sword hanging over your head. Now, the reason I love to do that is because early in our relationship, they might not want to elect 100% bonus depreciation, which drops their cost basis to zero. They can do 10-year straight line. People have forgotten about that. Nobody likes to talk about that anymore. It's not very sexy. I get that. But I've had an awful lot of people that we counseled in our exit strategy required meeting, and they ended up with 10-year straight line. It's been 5 years. Guess what? Boat's gone down in value. Of course it has. And but they still have a large cost basis that we're able to use. And I've had a lot of people say, man, Patrick, thank you for, first of all, explaining that I had a secondary choice, and then looking at my style and my needs and what I wanted for myself and my family. So the exit strategy is a big deal. I will say this: we've never had a problem ever with people that understood what was coming and where there was input and conversation. I had a gentleman the other day arguing with me. I told him, sir, if you're going to come to a gunfight, bring a gun. Don't bring a knife, because I have a gun. So he's a police officer, by the way. He thought that was hilarious. But basically, he was saying that you can't 1031 anymore. And he was referring to a tax statute that has to do with real property. Of course,
Real estate.
boats aren't real property. So I said, well, sir, I said, you're wrong. Sorry, again, go get a gun. But I said, here's what happens. If you sell the boat in the 5th year, let's say you sell it in January, and you buy another boat in the same year. I said, it's not a 1031, but effectively you're starting a fire in February and you're putting the fire out in June. Now, that's going to depend on what form of accelerated depreciation may be in play at that time. So that's always an option. Another option that I like very much is, we call it buying down or stepping down. Maybe you sell $1 million yacht that's got a very low or even a zero cost basis, and let's say you buy a smaller one. Maybe you buy a 40-footer, one of these new great monohulls that are gorgeous and wide and have water makers. I mean, they're the coolest things and they sail. You can sail them. I mean, I have to have both engines on mine on at all times if I'm sailing to get the thing, to come around. That's a separate issue. But the point is that there's a lot of ways of dealing with that. And other people maybe will take the yacht out of full-time charter in the Caribbean and they'll put her into a school or a class maybe up in the Chesapeake maybe or something. So as long as we're talking about it and as long as you understand what's coming, and by the way, we'd like to do that conversation about every 6 months. We have never had anybody surprised, angry, disappointed. It's never happened.
And
Yeah,
have
I
you
think it's
found, go ahead.
Yeah, I think it's very important to discuss that up front because in the sales world, what I've seen in this is that someone listens to a myth of inflated profitability and realize that that's not just the case. So then, therefore, they just definitely want to jump into selling the boat again right away. And then they realize that they're going to get hit with recapture and are unable then to do that. So these are really important things that need to be discussed ahead of time with full knowledge and understanding of the exit strategy. And that's why it's so important to discuss it.
Well, it is, and thank you, Amanda, because as usual, because again, better people that are fiduciaries, or in other words, they hold themselves to a client for life. This isn't a one-timer. This person's going to buy a yacht from me, probably buy another yacht from me, probably buy another yacht from me, and then a dinghy for me, or I don't know. But that concept of we care about you for life, we're bringing up subjects that other people, I've had a lot of people such as Amanda will say that as they're talking to a broker or person, that's new to them, they'll say, well, I don't know what you're talking about. No one has had this conversation with me until you. And I think that there's the difference. There's the difference right there. Again, it's an easy problem to fix, but you have to know it's coming.
Yeah, you were talking about the cogs in the wheel earlier, one being the buyer, of course, one being the broker, one being the person who advises them in these financial steps, one being the insurer, one being the charter management company. To me, as a broker, when I think about talking to a person, putting a boat into a business, one of the main things that I need to understand is the charter management company that will be actually caring for the asset. To me, I think that's probably a 50% role in the choice alongside with the actual boat. So if, you could speak to that, Patrick, about those cogs and what's important.
So once again, I think there's kind of three ways that you could purchase a boat that all of us, are bored by this information, but you can grow a crude yacht, CREW. I think that's one method that's very complicated, very dangerous, very dependent on the crew. Then you have what GI, again, guaranteed income. Some companies offer that, some don't. That's fairly straightforward, might not make as much money. In other words, if I go to the bank and I buy a CD, I'm probably going to get 4%. If I go to that same bank and I buy NVIDIA, I might get 500% growth on that asset. So I'm settling for the guarantee. Then the third category, which of course is the most popular, is variable. So real simple, we understand, boat goes out, I get a split, whatever that split is, it changes a little bit depending on the circumstances, but I of course pay all the expenses. Understanding those three models, yes. Some of the charter operators that we have worked with, we work with everybody. I had a gentleman that was referred the other day by a particular brokerage company down in the USVI. And he said, well, I assume you're related to this company that referred you. I said, sir, I am not. I said, there's 17 operators in the Caribbean Ocean. Firm deals with all 17 of them. I said, now, are there some that we think maybe do a better job. Yes, there are. I'm sorry, but if you work with 17 accounting firms, you're going to find some of them are better and some of them, not as good. But that being the case, I think as long as the information that's been presented is honest and accurate, based on kind of my understanding a little of kind of what that looks like. I had a gentleman the other day that's buying a huge boat up in New York City, and he's expecting to lose about $100,000 a year based on the representations that have been made to him. He's fine with that. He's not angry that he's not making any money on this big giant battleship. So I think as long as the information that's being presented is accurate and realistic, understanding that there's good presidents and bad presidents and good economies and bad economies and things like that. I always worry when somebody tells me that they're looking to invest money in a boat. I think boats are not very good investments, and they're trying to make a 5% return or an 8% return. I always say, look, buy Home Depot, buy some Walmart, and take your profit from Walmart and charter a boat. Don't own one, because they're just not great assets.
Right. We've definitely seen that it's a lifestyle investment than it is a fiduciary gain investment. And I have seen years where it has been a fiduciary gain, but like you said, there's peaks and there's valleys, there's highs and lows. And you never know with maintenance when one year you may be hit with something where you have to replace a generator, and then that is what will make a
Wipe
huge
out all of your revenue.
Exactly. So there are so many unknowns in this that you have to be aware of and ready for in this investment. And it's good to have that understanding.
Yeah. Well, and again, it's all, and we would know it as it's kind of what we were expectations. If you were expecting to make a couple $100,000 a year, like one of these people that made a representation to a new client of ours here not too long ago, again, it looks great on paper. If your boat's going out 52 weeks in a row, which he didn't quite promise that, but he was close. He was close. Boy, does that look good. I'm like, sign me up. Sign me up. I'm ready.
too.
Let's do it. I'm your new partner. I'll put up the cash. But of course, it's not true. And so again, and by the way, we have the same parallels in the aviation world. A lot of people will buy an older plane. And again, a small repair to a jet engine can be
Can set you back.
$250,000. You can buy a whole yacht for what it costs to repair the port engine, the port turbine. So again, everything's going along fine until something breaks. And then, like you said, when it's time to put in a new generator, you're like, oh my God, not to mention the fact that she's out of charter. Obviously, she's going to be sitting there, and there's time frames and this and that. So it's again, I appreciate and I respect very much, Amanda, your concept about the charter operator. I'm a bigger fan of getting the right broker. Sorry, but the damage I've seen in human tragedy over the years. It started with an incomplete or maybe a broker that maybe again either didn't know their responsibility or did know their responsibility. So I'm big on working
one
with
of those
people.
myths that is a common misconception that some brokers may or may not know. And that being, does a person have to buy a new boat to then get these tax advantages, or can it be a used boat?
So incredibly, this is one of the tried and true, I guess, myths that really comes to the surface very quickly, and because it used to be that way. It used to be that way. And so people remember, I had a gentleman the other day, again, his attorney and him called. And by the way, real quick conversation, his attorney said, I haven't brought my client on the line yet. He said, it's just me and you, buckaroo, I said, oh, okay. He said, now I'm going to ask you a question. And if you answer the question correctly, you and I can be friends. And if you don't answer the question correctly, then we can't be friends. And I said, well, I want to be friends. And he said, great. And then he asked the question, and it was a very straightforward question, but he also understood that it had to be new because the last time he was involved in a client decision to buy an asset, it had to be new, had to be brand new. Now, of course, it's new or new to me. So yes, used boats are incredibly cool for a whole bunch of reasons. Number one of which that right now there might be some inventory left here. By the way, when my feet hit the floor on July 5th, and I found out that the OBBB had passed, and I realized that Trump, incredibly, was going to make it effective to January 19th of 25, which has never happened before. My first thought was inventory, 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 inventory. So again, it's not my place to start calling clients and saying, hey, you better get on the stick, puppy. I mean, that's not my place. It's not my lane. But some people did, and they got the boat they wanted. Some people didn't, and they didn't get the boat they wanted. But I love used boats. I bought used boats. I've owned used yachts all my life. And the fact that they're now depreciable is the coolest thing, I think, in the whole world, and really opens the door. I mean, there's people that just don't have $1.6 million. They just
Right.
can't qualify. They're lovely people.
Yeah,
But
no,
my
it's
God, they
true.
can come up with 900,000. So now they can have the yacht they want. They can have the lifestyle they want. They can spend time with their kids and their grandkids. They can do all that at a budget that they can afford. So
That's
again, thank goodness
very
for
important clarification. I wanted to come back to say as well regarding the charter operators. It's a conversation we'll have actually. What to look for, what questions to ask, what due diligence, because that's really, really important, essential. I wanted to circle back to one last topic regarding the exit strategy, and that's really just about your experience, Patrick. But what have you found your clients end up doing? Do they end up selling the boat sooner than they thought or later than they thought? I'm just really curious about that.
because they're in our influence. I don't know if that came out right, but because they're in our universe, they sell much sooner. I had a number of boats in 5-year programs. I mostly got out in the 3rd year. I made sure contractually, of course, that I could do that. And here's why. My boat is going to start going down more rapidly in the 4th or the 5th year. Stuff's going to start to break. Those crazy people that keep shifting the transmission in and out as they're trying to get to a mooring ball, that's going to catch up with me. That's going to catch up with my transmissions. And so the other problem is the boat I'm interested in buying, the longer boat, remember the old joke on my bigger boat, it went up. Now it's gone up 3 years in a row, maybe 8%, 12%, who knows? I don't want it to go up again. And I don't want it to go up again with my boat going down in value. That chasm is getting worse and worse. So most of our clients start thinking, hey, it's been 3 years. We've had a great time, but we might want to, get our broker back on the phone and say, hey, you know what is this looking like? Newer boats are cooler. The water makers are better. The electrical systems are better. Heck, the refrigerator on my boat is bigger than the refrigerator at my house. So that wasn't possible years ago when
No,
I
it
had to
wasn't.
hold my wife's ankles and hold her upside down so she could reach down in there and
Reach
get
the
the chicken
bottom.
at the bottom. So anyways, that means, so I think usually, to answer your question, sorry, succinctly, we tend to get out a little bit quicker. Now, if it's your forever boat where you're just chartering
Mhm,
her, and that's pretty
mhm.
common for people saying, hey, we're not selling this, man. At the end of 5 years, we've got her pretty much paid down and we're going to hop on her and we're going to Thailand. Now, no one's ever done that, by the way, but that's their intention at the point of purchase. A lot of people are going to keep the boat.
And that's why you do check in every 6 months. I love the fact that you're checking in every 6 months. I really think that's a plus to your business model and what you offer your clients.
Super. Well, I agree.
All right. Well, thank you so much, Patrick. I guess if we had one last question, actually two last question, um, what has been the biggest misconception or the biggest clarity you've been able to bring to clients, perhaps in the last year or two? That will be my next final question, I would say. And then what resources then would you recommend for folks that want to learn more about the services you offer and exploring a collaboration with your firm? So, biggest misconception or aha moment, and then what should people do if they want to explore this avenue?
So I think those are very easy to answer questions. So the aha moment is the fact that people do not understand the difference between depreciation of a yacht, which by the way is a vessel, barge, or tug, compared to real estate. I had a gentleman the other day that called me up and he said, well, Mr. Wehrly, your firm comes highly recommended. And I'm looking at condominiums and yachts. And I said, no. And he said, well, what do you mean, no? I said, no, you couldn't be looking at condos and yachts. They're dissimilar assets. He goes, well, they're both, I can depreciate them both. I said, no, you can't. So I said, who told you that? So, of course, the real estate broker told him that. But anyway, so I explained that he would get $50 in depreciation from the condominium and $1 million in depreciation from the yacht. So I think people, by and large, cannot imagine that you can buy a boat on Monday and write the whole thing off on Tuesday. That has been a huge revelation for them. I spoke to a gentleman yesterday afternoon, very nice man, and he's been waiting to talk to us for, I think, 10 days. And he said, I didn't know that. I didn't understand that. I thought boats were 5-year, maybe 7-year assets. I said, they're not. So that's kind of been the big aha movement. So that's question number one. Question number two then, or final point number two was what? Oh, who they should talk to. Sorry. Okay. In my opinion, so years and years ago, I was a real estate broker in Beverly Hills, and I had a beautiful, beautiful Cadillac. I just love her to this day. And I would drive people around and I would take them out to lunch at the nicest restaurants, and I paid for everything. So they got my services, they got my knowledge, they got to see a house next to a school district
Right.
they wanted. They got they got all that, and I paid for everything. We're just driving around in my car, having a good time. I tell people, get a broker. Get a broker, because you're not paying them in that sense. And I don't mean to disparage their income. I do a lot of tax returns and I'll tell you, they make very good money, and they should. So I tell them, the sooner you get somebody that can stop you from going into dead ends and cul-de-sacs and get you on the road to what you want, when you want it, at a price you want, they're going to do all that, and the seller is going to pay the bill. So I tell people, get a broker. That if you want to learn more, you can Google yourselves until your arms fall off, but you're not going to get the warmth, the consideration, and the genuine attention that you need and deserve from anybody other than a good broker.
That's
Great to hear.
really great. And so, for those of our clients who may have a person of choice, an advisor, a wealth manager, explain a little bit how that collaboration goes. You're obviously not incompatible. You're not replacing the relationship that they have with their own advisor. Can you just perhaps speak to that, and how do they engage with you to evaluate that next collaboration, if there is one?
So that's a great point, and I appreciate you allowing me to mention that. So first of all, we occasionally will run into someone where there's resistance on the part of the financial advisor. And I'm not saying that happens all the time, but it happens from time to time. If this gentleman, we'll call him Bob, if Bob's going to take $500,000 out of his investment account to put down on a yacht, that money is not going to pay commission anymore. And so occasionally there are some times where there's a little friction, a little resistance there. Very often people will call me up and say, listen, who's going to do the business tax return? I say, well, our firm is available to do that. We're really good at it. We're friendly. We're reasonable. It's part of our retainer. You probably want us to do that, but we're not after your 1040. We're not after your personal return. We're not soliciting you in any way. In fact, not only do we not want to alienate the person that you've been using all these years, we want to bring them into the partnership. We want to explain that we've got a K1 coming your way that's going to make a sound when it hits the desk. It's going to make a thud. And so we're embracing the financial people. And I think that's the mark of a good partner, that they're embracing the existing team, but they're providing something, again, that the team doesn't have and maybe can't offer. Again, proper business construction, proper business operation,
Right.
proper exit strategy, those
All the
kinds of
spokes
things. So,
in the wheel we spoke about.
It
Very
comes to
clever.
a specialty as well. When you're thinking about these things, your CPA may be great at your own personal taxes, but does not know the maritime industry and all the ins and outs that are necessary and the check boxes. And so getting the K1 from your firm and then giving it over to their personal CPA is sometimes the best route just because of your specialty.
well, we actually had a gentleman out of Frisco the other day, San Francisco, and he said, I want to preface my comments by saying that the firm that has represented me for many years is going to disown me if I purchase a yacht, unless your firm is going to prepare and sign the return. Again, the yacht return. I said, well, good
Sure.
news. That's we're doing that. We're not soliciting you in any way. But we are certainly going to do it this way. So anyways, in a later conversation, the CPA in a later conversation said, I'm so pleased because we love this guy. He's a very big client for us. And he was dead set on buying a yacht. And we can't even spell the word yacht. So we're delighted that you're doing the K1s and then we assimilate that into his personal return. So it's, I think we're all making the same point here.
Right.
Well, thank you so much for your time, Patrick. It was a delight speaking with you and answering a lot of these questions that we had prepared and we asked before and discussed with clients. So this is awesome summary. If you're viewing this recording and have questions, put your comments down below. We will answer all of them. And to follow Current Yachts and our podcast, just subscribe. Thank you again, Patrick. And we look forward to our continued collaboration. Have a great day and fair winds.
Fair
Thank you very
winds.
much. Thank you. See you in Miami.
That's
You
right.
got it.
Bye-bye.